Classification of business entities according to legal forms are: first, we have sole proprietorship, second, partnership, and third, corporation. Let's begin with sole proprietorship. Sole or single proprietorship is a business concern owned by only one person. The daily operations of a single proprietorship may be managed by two or more persons. The term ownership does not connote and is not similar to management. A person who manages the affairs of a business does not imply that he owns the business. Sole proprietorship is usually small in terms of business operation and resources. Typical examples of these are convenience retail stores, barber shops, phone shops, repair shop, and outlet of agriculture products. Sole proprietorship has the following characteristics. First is simplicity of operation. Second is in terms of formation and management. Third is growth is limited to the resources of the owner. Fourth, limited capital. Fifth is unlimited liability. Let's get into first, which is the simplicity of operation. The nature and scope of operation of small proprietorship is usually simple compared to partnership and corporation. The day-to-day business operations are focused mainly on its primary routine activities. In most instances, sole proprietorship operates in one local or location only. For example, a beauty salon or parlor shop simply extends hair cutting, hair styling, and other related services all throughout its entire operations. Similarly, a convenience store owned by one person performs by buying and selling of goods throughout the year. Sole proprietorship mostly carries one main simple business activity. Because of this practice, the owner of the business also acts at the same time as a manager, cashier, and or record keeper. Next is ease in terms of formation and management. Of the three types of business organizations according to ownership, sole proprietorship is mostly easily formed and managed. With enough start-up capital, a sole proprietorship is formed once all the documentary requirements are satisfied. The owner usually starts the processing of business requirements by seeking the approval of the trade name from the Department of Trade and Industry or DTI. Once the official trade name has been approved, the owner then processes all the city or municipal requirements for business permit. Also, the printing of business documents like sales, invoice, and official receipts, including the registration of the books of accounts, are sought from the Bureau of Internal Revenue or BIR. The management of the sole proprietorship is easily undertaken because it carries very simple operations. Usually, there is no hierarchy of management in sole proprietorship. In most instances, there is only one manager who is also the owner. Sole proprietorship need not to register with the Securities and Exchange Commission or SEC or with other regulatory government agencies. Third, we have growth is limited to the resources of the owner. The financial growth of a sole proprietorship is always limited compared to partnership and corporation because one factor that determines the financial growth of the business is its capital base. A business with a strong capital base can always grab favorable business opportunities that come along its way. On the contrary, a business with limited capital base cannot rapidly take favorable business opportunities, thus slowing down business growth. Since in the most instances the capital of the owner in a sole proprietorship is limited, its financial growth in terms of result of operations is also limited. Fourth, we have limited capital. The capital of a sole proprietorship is usually equated with the financial standing of the owner. Since there is only one person providing for the capital of the sole proprietorship, its capital base is limited. Most of all proprietorships, because of limited capital, operate in only one location. In contrast, partnerships and corporations, because of having several owners and thus a bigger capital base than sole proprietorships, can easily open new branches in other locations if opportunities warrant. The capital, therefore, of a sole proprietorship is largely dependent to the personal financial capital of the owner. When the owner is personally having a financial difficulty, the business will most likely experience a similar fate. And lastly, we have unlimited liability. Liability refers to the financial obligations of the business or those financial obligations that have not yet settled. Liability usually arises because the business buys goods or services on credit. When the business cannot finally settle or pay its financial obligations to the third party, the creditor may go after the personal property of the owner without prejudice to the personal editors or creditors of the owner. For example, Jenny is owning of a beauty salon. If the business closes its operation because of bankruptcy and a creditor has not yet paid amounting of 12,000 pesos, then the creditor can run after the personal property of Jenny. The liability, therefore, of the sole proprietorship extends to the personal property of the owner. Our second classification of business entities according to legal forms is partnership. Partnership is a business entity that is owned by two or more persons. The owners of a partnership are called partners. Basically, partners bind themselves together through an agreement to contribute money, property, or industry to a common fund with the intention of dividing profits among themselves. The financial growth in partnership is better than sole proprietorship because there is pooling of resources between and among partners. In addition, the management of partnerships is more effective and efficient since planning and decisions are usually made through the pooling of two or more heads. The partners, except for limited partner, are held personally liable for the partnership's liabilities when the partnership does not have the capacity to settle its financial obligations. Thus, if the partnership cannot settle its financial obligations because of bankruptcy, the creditor or creditors may run after the personal properties of the owners. The life of the partnership is easily dissolved compared to corporation. The following causes may dissolve the life of a partnerships. We have death of one of the partners. Second is admission of new partner in an existing partnership. Third, we have permanent withdrawal of the investment of a partner upon the dissolution of the partnership. The remaining partners may continue its operation under a new partnership. The accounting for partnership is usually discussed after completing the requirements for sole proprietorship accounting. Our third and the last business entity according to legal forms is corporation. Corporation is a business entity formed by at least 5 but not more than 15 persons. The persons originally forming the corporation are called incorporators. A corporation may be a stock or a non-stock corporation, and profit or a non-profit corporation. Also, a corporation may be classified as either domestic or foreign. A corporation is classified as a stock corporation when it issues shares of stock of the owners as evidence of their interests and ownership. Non-stock corporation, on the other hand, is not authorized to issue shares of stock to the owners. The owners of stock corporation are called stockholders or shareholders. In a non-stock corporation, the owners are called members. A corporation is categorized as a profit corporation when it returns its income in the form of dividends to the stockholders. A non-profit corporation does not necessarily mean that it does not earn income, but rather its profits are not distributed to the members. A domestic corporation is a business entity organized under the laws of the Philippines. On the other hand, a foreign corporation is a business concern organized under the laws of the foreign countries but operating in the Philippines. Corporation is the biggest and the most complicated form of business organization. The management is entrusted to the board of directors elected by the stockholders themselves. A corporation can raise additional capital requirements when necessary by merely selling shares of stocks. The stockholders or shareholders are not bound to pay personally the financial obligations of the corporation, and their liabilities are limited only to the amount of their investment. Limited liability, however, legal restrictions are applied strictly to corporate entities, and they are highly monitored by government bodies. Let us know and go forward to the nature of business organizations. A business organization may be classified as also according to its nature. The term nature refers to products and services that the business produces or sells. The classifications of business entities according to nature are as follows. First, we have service concern. Second, merchandising. Third, manufacturing. Fourth, agriculture. Fifth, hybrid business. And lastly, we have special corporations. Let's begin with service concern. The service concern sells services to customers. The primary source of income comes from the services rendered to customers. Service concerns are classified as non-professional service and professional service entities. Non-professional service entities include laundry shop, car repair shop, beauty parlor, and banking institutions. Professional services entities include law offices of lawyers, medical clinic of doctors, and auditing and consultancy office of accountants and others. Second, we have merchandising. The merchandising business entity is engaged in the buying and selling of products or goods. This business concerns does not change or after the form of the product purchased. In other words, no conversion process takes place from the time the product is purchased from the supplier up to the time it is sold by the merchandising business to the ultimate consumer. In merchandising, the business buys the product in a certain form and sells it also in the same form. For example, a merchandising business buys flour and sells it as it is a flower. there is no change in the product's appearance and form. Grocery stores, hardware stores, and dry goods are common examples of merchandising business. Third, we have manufacturing. A manufacturing business is a producer of goods or products. It is engaged in buying raw materials and supplies for processing to finished products. The salient feature of manufacturing business is the conversion process that takes place from time a raw material is purchased up to the business is the conversion process that takes place from the time a raw material is purchased up to the time it is sold as a finished product. In other words, the product being sold is not in the same form when it was purchased. The raw materials used in making the product are considered inputs to the production process. To convert the raw materials, the labor or workers is necessary to make the products ready for sale. Example of manufacturing businesses are furniture shops, car manufacturers, beverage companies, or producers of lard. Fourth, we have agriculture. An agriculture business is engaged in the production of agricultural goods and animals. Business entities engaged in agriculture may sell their products either in its raw form or finished form. Business entities engaged in the production of pineapple or sugarcane, coconut plantations, or business concerns raising hogs and other poultry products are considered engaged in agriculture. Our second to the last is hybrid business. A hybrid business possesses the nature and characteristics of two types of business entities. Restaurants and fast food chains are classifications of hybrid businesses because their very nature is to process and sell food items and at the same time to provide excellent services to customers. They have the attributes of manufacturing business and a service concern. And lastly, we have special corporations or organizations. This type of organization includes the following. We have cooperatives, joint ventures, and non-profit organizations. Thank you for participating. I hope you have learned something more about this video. See you in our next learning episodes and goodbye, students.